I don't think any other stock has captivated investors on Wall Street or Main Street the way Tesla has. It's just become one of the most controversial names and one of the most watched names out there.
This summer, Tesla became the most valuable auto company in the world, surpassing Toyota and claiming a market cap of nearly $183 billion before continuing its climb.
The electric vehicle maker's stock speeding this year.
Musk's wealth skyrocketing thanks to a surge in Tesla shares, making him wealthier than Warren Buffett.
But the company's fundamentals don't seem to explain the rise. For example, Toyota sold almost 25 times as many vehicles as Tesla did last year. Instead, the rally has been driven by investor enthusiasm for CEO Elon Musk, in a belief by some that in the future, cars everywhere will be powered by batteries, not gasoline. Here's how Tesla became the most valuable automaker in the world. Tesla developed its first car in the early 2000s, but to follow its ballooning share price, a good place to start is last fall.
In October 2019, Tesla reported a surprise profit for its latest quarter, and that just sent its shares soaring. Just a few months prior, Tesla shares were hovering near a 3-year low. The prior year, Elon Musk had tweeted that he was going to take Tesla private at $420 a share, and that landed him in the crosshairs of regulators. He'd also kind of had a history of missing financial targets and car delivery targets. So that's why this surprise earnings beat was a really big deal.
Amid the rush of investor optimism, in mid-November, Musk held an event in Los Angeles to reveal Tesla's Cybertruck.
What he did was he unveiled this pickup truck that looked unlike any other pickup truck we had ever seen before. And he boasted that it was really, really durable.
At the event, a Tesla employee threw a metal ball at the window to show its strength, but ended up breaking the glass.
Oh, I should say also, we're going to be offering rides in this all night. Yeah, don't mind the glass.
The next day, shares fell more than 6%. But amid press around the event, the stock quickly recovered, and on December 23rd, it surged past $420.
The reason that 420 mark is kind of a milestone is that, that was kind of the tweet that landed Musk in the crosshairs of regulators.
The SEC later said the tweet was a reference to marijuana culture that Musk used to amuse his girlfriend.
The shares crossing 420 later in the year, it was kind of a victory in that sense.
In the following weeks, Tesla had a string of wins. The company said it met its delivery goal of 360,000 cars for the year. And less than a year after breaking ground at its China plant, the carmaker met its objective for Model 3 production at the facility and held a press conference to celebrate deliveries of China-made Model 3s to Chinese customers.
Many people view China as the world's biggest market for electric vehicles. So in order for Tesla to kind of make this journey from, just a small startup to a global behemoth producing electric cars, bullish investors say that it needs to target that market. So this boosted expectations for the coming year.
The investor momentum continued when on January 29th, Tesla posted a profit for the second quarter in a row. On the earnings call, the company said it was well on its way to producing its next car, the Model Y compact sport utility vehicle. And it told investors the business should be profitable going forward.
So this was around the time that Tesla shares really just started to go parabolic. And you saw Wall Street investors, Main Street investors kind of all piling into Tesla shares, Tesla options, and it just kind of became this huge frenzy around the company.
But not everyone was betting for the car company.
The fascinating thing about Tesla is that despite its kind of meteoric rise in the stock market this year, it remains one of the most popular shorts. So that means it's a really popular bet for investors who think that the shares are going to absolutely plummet. When the stock goes up, that's painful for a short investor. That means that they're losing money. So some people can't hold on to these money-losing positions for too long, so they have to close out their positions. And sometimes they do that by buying Tesla stock. In this kind of unusual twist, you have investors who think the shares are going to go down, actually helping to drive it up.
But this stock run-up was stopped short in March. Despite investor enthusiasm, Tesla was not immune to the market effects of the coronavirus lockdowns. That month, California issued stay-at-home orders, leading Tesla to suspend production at a factory and interrupting the company's ramp-up for its newest vehicle. The stock fell in March and then quickly bounced back as the market started to recover. At the heart of this downturn, the Federal Reserve enacted a massive stimulus plan to buoy the economy, fueling a broader recovery in the stock market that also lifted stocks like Tesla. On April 29th, Tesla reported another profit, the third in a row.
Even through the low of the S&P 500, the S&P was down roughly 30% year to date. And meanwhile, even through that time frame, Tesla stock was up. So despite a recession, a global pandemic that could crimp demand for cars, Tesla stock has still been resilient this year.
Then on June 10th, investors pushed the automaker's stock past $1,000 a share for the first time ever, after Musk told employees it was time to begin production on the company's all-electric semi-trailer truck. By July, Tesla became the world's most valuable car maker, overtaking Toyota. And on the 2nd, Musk taunted the short sellers when shares opened above $1,200 for the first time after Tesla deliveries beat expectations and investors anticipated the company's inclusion in the S&P 500 index.
In order to be considered for the S&P 500, a company needs to deliver a cumulative profit over 4 consecutive quarters, including the most recent. So even before Tesla's most recent earnings report, a ton of investors were anticipating, hey, we think it's going to be profitable this quarter. We think it's going to be in the S&P 500. And that drove the stock even higher.
On an earnings call on July 22nd, Tesla said it hit that goal, defying the Wall Street bears who expected a loss.
We were able to achieve a 4th consecutive profitable quarter. And although the automotive industry was down about 30% year over year in the first half of the year, we managed to grow deliveries in the first half of the year.
If you bought 10 shares of Tesla last June, in June 2019, it would have cost you a little more than $1,700. If you held on to that investment through late July, it would have been worth more than $15,000. Bears still say that the stock is going to go down. They don't think that Tesla will bring electric vehicles to the masses.